We're not trying to pick on anybody or try to be clever when we say that there are 12 common mistakes that trustees do make that we've identified over the years. We just want to point items out and where to go and look on how to fix this. Okay, so here we go. There's no particular order. It's not like from number 12 to number 1. It's simply in the order that we've written an article, which you can actually refer to from here as well. If you go click below, you'll be able to get through to an article where this is all in a nice summary nutshell. Okay, so here we go. So the first thing that we note that trustees often tend to do, or not do, I should rather say, is they overlook the fidelity cover. Now, the fidelity cover is pretty important. You can find out, you can just go to Regulation 15 in the CSOS Act. It's very easy to find our booklet. You can just have a look and see our booklet has all of the stuff in it, easy to find. But Regulation 15 sets out the formula that needs to be looked at in order to work out the minimum amount of fidelity cover that you need. Now, for example, you just need to look at the latest budget, you need to look at your latest financials, and just extract some figures, work it out, and there you have your figure that you should be insured for, and then just check back to your policy and make sure that it's there. But more importantly is also to check that you've got the right policy, that you are covering the right things. You're supposed to cover the naughty trust, you're supposed to cover the body corporate to protect the body corporate against naughty trustees, but also a naughty managing agent. And if you haven't notified the insurer, for example, CIA, who your actual your managing agent is, you might have a problem at claim stage. So I would suggest that you just have a look at all of the little ifs and buts about your fidelity cover. Go to the broker and ask the broker, have you looked at this properly? Is this the correct cover in terms of Regulation 15? You can actually give Regulation 15 to the broker and say to him, give me written advice about this and about our policy. Okay, so that's point one. Okay, the second item, failing to obtain written advice. This is fairly common. Okay, it's in phase legislation. It's actually the phase code of conduct, where it's very, very clear that a broker needs to provide written advice annually, and he's got to show that they've actually looked at products for you properly, and this needs to be provided at renewal annually. Written advice. So you need to say, well, where did I go? I went to this company, that company, and this company. We analyzed, and where you are at the moment is still the best insurance, even though you're paying 10 Rand a month more than you would elsewhere. The excess structures are better. And of course, we're covering you for retaining walls. The other one wouldn't be, or whatever. So written advice from the broker, critical. Our written advice is pretty standard. Every Addsure client receives written advice annually, a few weeks before the policy renews, and then the trustees need to deal with it properly. It also needs to be minuted properly. So once you've received the written advice, the trustees should actually take that advice to the next trustee meeting and say that we've received the written advice, everybody's seen it, we're attaching a copy, we are following the insurance broker's advice to stay insured with this company for that reason. Okay, enough said on overlooking written advice. The downside of not doing it is when a claim comes and an owner puts up his hand and says, but hang on, this would have been covered. My broker says, and I've heard this a few times, my broker says that that should be covered if it was with that company. Well, if you've got a written advice, you can show your owner and say, look, we did go to that company, but they declined to actually insure with us, or whatever the case might be. I'm not going to go down that road too much, but believe me, you want that advice in writing when the disputes arise. Okay, the third one we see is replacement values often taken too lightly. Well, it is legislated now. It's very, very clear that a body corporate needs to have a proper valuation done at least every 3 years. Don't leave it. We feel that if you're a homeowners association, you should also do it periodically, but definitely a body corporate needs to do it at least every 3 years. You're insuring other people's homes. So let's do it properly. I mean, that is really important. Um, there is an assumption that insurance is in place, and if it's in place, it's fine. It might not be fine. And if you're a trustee, let's look at it. Call the broker in, let the broker give you an explanation. Let's go through the policy together. Let's understand it. Okay, then the fourth one, item number 4, not appointing a reputable managing agent. Now, this can be a little bit iffy and sensitive, um, but be careful. People think, I'll just get my friend. She's a bookkeeper. She can run the books and do the things here for us. Just be careful. What you really need is a very good managing agent to keep you out of trouble with all the legislations. Our governments are very good at just churning out new legislation all the time. Poppy, copy, hurry this and poppy that and fika that. And next thing you might not be covering all of the bases. Get a good managing agent, one that's registered with the PPRA, that it's got all the credentials, and also that your insurer are going to be happy to give you fidelity cover against, and a managing agent who carries their own PI and fidelity cover. Let's make sure that the extra layers are there. That's what we suggest. We also, I haven't mentioned it in the article at this point because it's also debatable. Some managing agents are not members of NAMA, and I don't want to prejudice them when I say that. But traditionally, I've always said that, managing agents who are NAMA members and attend the NAMA functions and NAMA training, or the Let's Get Physical type of training that we do with other professionals, they're the managing agent that you would want to gravitate towards usually. But I'm saying that with long teeth because some very good managing agents are not necessarily members of NAMA. Okay, so there we go. Neglecting safety in common areas. And I see this even more often. Very, very typically around a swimming pool. If I'm a trustee, the first thing I do is I go to the swimming pool, almost like daily if I can. I walk past the swimming pool gate just to check that the gate is still locking properly, because you don't want to be a trustee in an environment where safety is down and a child drowns or is hurt or something bad happens because you, as a trustee, did not take safety seriously. So that's I don't think I can say that in a more sort of emphasize it anymore, but I would definitely look at safety aspects, things like loose paving, cracked tiles, especially on stairwells, broken handrails, lighting in stairwells. All of these things need to be tip top. When the slip and fall happens, it's going to be you, the trustee, that's going to have the finger pointed at. But I do see a lot of neglect these days. Oh, we don't have enough money. No excuse whatsoever. Safety first, raise a special levy. Choosing the cheapest premium is a mistake. That's item number 6. Just going for the cheapest premium, I've seen big mistakes there. There are some rogue brokers out there, like in any industry, who will sell you anything as long as they can get the business. There are some inexperienced brokers as well who are, trying to make a buck. And, we respect that. We don't want to put barriers to entry and say you should only work with experienced and people that have been in the industry for years, because otherwise you'd only be working with pensioners then, wouldn't you? We need to encourage, obviously, the young and newer brokers, but you've got to be very careful when you're choosing your policy. Brokers that are eager to do business with you are often just offer you the cheapest premium, and it often sacrifices your excess. So you've probably got a higher excess. Yeah, you've sometimes got watered down coverage. Um, but more importantly, they might be taking a little bit of a chance. In other words, your claims ratio might already be running at 60%, and so your premium is actually almost on the edge anyway, and they come and give you a 10% discount. It effectively puts your premium at 70% claims ratio, which means that your premium is not necessarily going to be sustainable. You're either going to have a high increase, higher excesses, or even lose your cover in the not too distant future. So just be careful, rather go for a sustainable premium. You can watch some of our videos on claims ratio and you'll get a better understanding on where I'm coming from there. Then the seventh item, using a broker who's unfamiliar with community schemes. A lot can go wrong there. Your broker needs to understand, the difference between common property and a section for a start, needs to understand exclusive use areas. He needs to understand, or she needs to understand that, a garage might be common property. It might be in an exclusive use area common property item, or it might be a section. You've got to know how to set out your schedules properly accordingly. You also need to understand that swimming pools in exclusive use areas are a different animal and you've got to deal with them in a certain way. How to help managing agents account for the exclusive use area contributions, the insurance portion, that is, and so on and so on. I'm not going to go into it in much depth, but there's definitely a risk if you're not using a broker who understands sectional title to some degree. Then, number 8, assuming that your existing insurance is just right, it's there, so it must be right. Not necessarily so. If you're becoming a new trustee, or if you've just been elected, or even if you're an existing trustee, it's about time, if you haven't done it before, is actually, have a look at the policy. Let's go through it. Ask the broker to go through it with you. Get another broker to cast an eye over your policy. We do an analysis for policies. Obviously, we're looking hopefully that we can, show up the other broker and see if we can tout for the business. But we'll do it very gently and very politely. Sometimes the other broker, if they've done their job properly, we give it a big tick and say your broker's done a good job for you. Okay, so don't just assume that your existing insurance, just because it's there, that it's adequate. It might be completely out of order. And I'm not saying go picky. You can always find something wrong with the policy. You might even find a spelling error, which might be important, but go through it and check. Overlooking, that's number 9 now, overlooking exclusive use areas. A lot of people don't really understand how exclusive use areas work and who's responsible for what. I think that's quite important. And particularly from insurance, when it comes to claims in an exclusive use area, let's just say, for example, there's a swimming pool and it's in a garden. Now you assume that it's, it's that person's swimming pool. Well, it's not. It actually becomes a common property swimming pool if it's in an exclusive use area garden. It doesn't belong to that owner. It actually belongs to everybody. It accedes to the body corporate and it's got to be dealt with in a certain way. So yeah, take a lot of care with exclusive use areas. We've actually been working with attorneys over the years. There's plenty of stuff on our YouTube channels about that. Go to TVDM's YouTube channel. There's a 4-part series on exclusive use areas, and watch the space. There's a lot more coming in 2026 with exclusive use areas. Look at it more seriously. Item number 10, we're getting there. Not understanding how to prevent claim rejections. That's all about mitigation, really, but a lot of people just become trustees. The storm season comes, the claims get rejected, and then up in arms, we need a new broker or a new insurer. Not necessarily so. It might be your fault. Simple things. clearing drains just before the storm season, checking gutters just before the storm season, having somebody check the roof. A month, September, October, now is the time to, now is always a good time, isn't it? To have the roofs checked for waterproofing problems and, have those things fixed. Preventing claims as well, rejections. There are other mitigation factors that you can bring in. You can, bring in specialists, do proper planning, talk to your broker, talk to us if we are your broker, and we can help you with some ideas. We'll come along and have a look. Avoiding claim rejections goes a long way in keeping everybody in the scheme happy. Okay, item number 11, that's the second last item. Assuming insurance covers occupational health and safety, in other words, OHS risks. We don't have to worry about OHS, we've got insurance. Okay, not at all. You need to worry about it. It's law that you deal with it in a certain way. I know I'm around about 2014, so more than 10 years ago, there was a lot of hoo-ha about it when the new Act came, or the amended OHS Act came into effect. And it's a lot of common sense, but then there are a few things that a body corporate should do. You should have your specs in place, and you should have a safety officer have done a couple of checks and balances for you, especially if you've got more than, say, a double story. I would definitely have somebody have done some sort of specification plan for you. If somebody is injured, climbs up a ladder, falls off on site, the trustees are criminally liable if you haven't been following the safety OHS regulations. There's no insurance that can get you out of jail free. The policy will only respond if, for example, a worker did trip and fall on a loose brick, and they were then to hold the body corporate legally liable through civil action. And there the body corporate's policy should respond. But no, not for normal OHS transgressions or fines and so on. Okay, so get yourself sorted in terms of that. Then the last one, is number 12, being misunderstanding water damage claims. Now, it's quite interesting. Water damages, if you look at burst pipes, water damages, leaking roofs, collapsing ceilings, anything to do with water damages is the most read and looked at articles that we write about that or videos we do about that. Very interesting. Most Google searches are on that. We've been doing articles and stuff for years and years, and we can see by statistics that always, every single month, the most, and a good 5,000 people click on our articles on our website. Well, 5,000 people check on our website every month, and about 3,000 read our articles. And it's most people are reading about water damages, and it's so misunderstood. So do try as trustees, try and, get yourself more familiar, understand, what is covered, corroded pipes are not covered, rusted roofs are not covered, but, sudden events on a perfectly good and well-maintained pipe or roof will be covered. But we've got lots more information on this. All we're suggesting is that you get familiarized with it, ask your broker, come to our website. We've got plenty of information. Our booklets, we've got a few booklets on different things, and most of all, our library, the Addsure library. I'll put up the link here. If you go to the library, you can find everything, all of our articles and links to our booklets and so forth. Okay, so I think that wraps it. Those are your 12 items. As I said, it's not trying to show off here. We're trying to just help trustees go through the items that they should be familiar with and they should just focus on to make sure that their insurance is in good order. Don't forget, please like, please share, and of course, subscribe to this channel. We'd love to have you on board, and so that you can find out every time we post, which is only about once a month. You just get a little notification to say new video on the Addsure channel. Okay, there we go. Have a good one.